Hello, and thank you for joining us for what we plan to be a highly educational webinar. Today's theme is Managing Crisis in Conflict Mineral Supply Chains. The objective of our speakers today is to provide you with pragmatic insights that will assist you in managing your responsibilities for conflict minerals compliance within your companies. We want to start with a bigger than conflict minerals view of lessons learned by others about managing crisis in extended supply chains. Rob Kassmeyer, president of Green Status Pro, has been a C-level executive in manufacturing companies for over 20 plus years. He has managed through several supply chain crises and very much wants to share his experience and perspective with you. Next, Rich Good of Ernst and Young will update us on how to prepare for the independent private sector audit. While the IPSA is a year away for most, now is the time to implement the required policies and procedures. Rich is a professional who will provide you with reasonable and pragmatic advice on best practices. And I'm John Logan of Green Status Pro. I'm looking forward to showing you how and why we are currently in the midst of a crisis in conflict minerals reporting. The issue we face is accurately preparing our 2014 RCOI reports despite a wide range of challenges. So please submit your questions at any time, and we will provide you with our responses after all the presentations. And by the way, of course, the presentations will be emailed to you tomorrow, so you don't have to take notes. We'll have them for you. Rob, will you start us with lessons learned from extended supply chain failures?
Hi, John. Thanks. I'm going to address supply chain crises that are all too often from extended portions of a company's supply chain. We'll talk about what that means for companies and how best to manage these issues. Responsible sourcing pressure is mounting. Legislation requiring supply chain transparency is driven by voter concern. Now, this is a long-term trend. It is not going away. And it directly impacts corporate stakeholders. In responding to such sustainability issues, companies typically focus on their core operations and the adjacent tiers, either direct customers and direct suppliers. These organizations typically have regular communications on many levels and are typically not the source of sustainability crises. The extended supply chain can be several tiers removed and incorporate distributors, trading companies, and other intermediaries. Your extended supply chain typically receives little visibility or attention and is the area of your most risk. Let's look at 5 recent well-publicized cases. Those of you who are auto and appliance companies will recognize the first one. You're all totally unprepared in 2006 when they found that some steel that they were producing used a pig iron supplier that incorporated Brazilian charcoal that was made by slave labor. Obviously, this caused a huge amount of C-suite attention by virtually all industry participants for extended periods of time, and subsequent support people throughout their companies. 2 companies, Ford and Kohler, stopped purchasing from affected suppliers immediately. Then in 2007, Mattel was caught flat-footed when lead paint was found on some of their toys. They had used a regular contract manufacturer who had bought a certain paint from one of their regular suppliers who had bought pigment from another supplier that had incorporated lead. This led to a costly recall and brand hit for Mattel. Gibson Guitars was shut down twice by the U.S. government in 2009 and again 2011 for importing ebony wood from Madagascar and India. This resulted in a significant loss of business and materials involved, plus fines and brand degradation. In 2013, the Rana Plaza collapsed in Bangladesh. This building housed a number of contract garment manufacturers and resulted in over 1,100 deaths, many more injuries. Inappropriate material had been used to make the factory, and workers had been forced to work that day even, despite obvious growing cracks in the walls. Walmart, Benetton, and a number of other well-known clothing brand retailers were not prepared. Since then, they've funded a $15 million fund for victims and their families and inspected 2,300 of the 6,000 garment factories in Bangladesh. Lastly, earlier this year, striking closer to home for many of us was another crisis. Some 68 companies filing to the SEC that they were potentially sourcing gold from a supplier in sanctioned North Korea. Well, amid significant negative publicity, boards and C-suites drove compliance officers and their organizations to rapidly resolve the problem to remove the corporate embarrassment and PR disaster. At this point, the SEC has not charged anyone. So if we think about lessons from these extended supply chain issues, they're similar. Number one, these crises are all remote areas of a company's supply chain where there's little direct communication or even awareness. Number two, long and short-term impacts are significant. These include significant brand damage, out-of-pocket costs, loss of life and jobs, personal disasters for individuals, and significant disruptions for companies. Next, substitution is a typical response. This is a quick response that unfortunately often causes unforeseen, unintended problems. The net is that supply chain turmoil is irregular in occurrence, but it's explosive when it happens, and incident levels are growing due to public interest and concern. The legislation is not driving it, it's following the interest in the public. Moving forward, best practices are to adopt a sustainable approach, anticipate, integrate, automate, and communicate. Put in place policies and procedures to help identify and mitigate extended supply chain risks. Recognize you're not alone. Draw on available resources, industry associations, attorneys, accountants, consultants. Automate wherever possible for accurate, cost-effective, and rapid information on which to act and communicate with your supply chain, through the supply chain, and also with your stakeholders. So summarizing best practices, number one, use 2014, the last few months of this year, and the reporting period next year for developing effective risk management procedures, and then roll out the tested procedures in 2015. The 2014 approach should be directed at going deeper, not broader, into your supply chain. Prove the approach in a focused way. Broaden it next. Learn to communicate effectively through the tiers. That's a big challenge. The third is automate, automate, automate for accuracy, speed, and cost effectiveness. And lastly, use gap or readiness assessments or so-called mock audits to identify problems and solutions. Now, Rich is going to address the gap and readiness assessments, and then later John is going to address the automation issues. Rich, do you want to pick up from here?
Yeah, Rob, thanks very much. This is really interesting, and in listening to your presentation, the one thing that really struck me was risk. And when you translate risk into the area of conflict minerals, a lot of people just think it's a regulatory risk. I file, I'm covered. If I don't file, I'm not. But there's other types of risk involved here too that you point out. Financial risk, potential fines or sanctions. Operational risk, if you can't get one raw material and you have to substitute, maybe someone else has figured out before you have, and they've taken the supply, or it's just not available. And finally, or an area that I think a lot of people ignore is reputational risk. You can really have an impact to your reputation through the actions of your extended supply chain. So my name is Rich Good. I'm Senior manager with Ernst and Young. I'm in our Boston office, and one of my responsibilities. I'm one of our national subject matter resources for Section 1502 of Dodd-Frank, better affectionately known as conflict minerals. And I'm happy to be with you here today. So in the few minutes I have with you, I'll have to show you the required disclaimer slides. Certainly not legal advice here, but really looking at taking a step back from the rule. This is not going to be Conflict Minerals 101. It's set the stage, looking at the drivers. What is this rule really all about? And we'll cover that in a way that I think that helps you take a step back and see the forest for the trees. We'll talk about lessons learned through applicability, RCOI, due diligence, and reporting, what we learned last year. Take a look at getting ready for the reporting for this year. Reporting on 2014 coming up in 2015 is going to happen before you know it. Honestly, in my practice, what happened is everybody was really busily working up to June 2nd. Then it's as if everybody fell off the face of the earth. It was very, very quiet, and people, I think, went on vacation or did their summer thing or caught up on their day jobs, heaved a collective sigh of relief, and then come September 1st, they said, "Oh, the year's 2/3 over. We need to do this again." So taking a look at where do we go from here is how we'll wrap up. So looking at the drivers, there are hundreds of pages of OECD, of the SEC final rule, OECD due diligence guidance, the pilot reports, from the OECD. There's FAQs, there's opinions, there's lots of good resources out there from EY, from other consultancies and law firms. SRZ is one that does a particularly good job. But let's take a step back. Who has the time to be an intimate expert in thousands of pages of this law, except of course us? This law is about identifying and responding to risks in your supply chain. And risk is something we can all understand. Risk is something that impacts business. Risk is something that prevents you from doing your day-to-day job effectively. So looking at it from that way, in a holistic perspective, then it really doesn't matter if this law is overturned. There's going to be others like it, whether it's tin, tantalum, tungsten, and gold, or chromium hexavalent, or phthalates, or PVC. It doesn't really matter. There are going to be more laws like this. So understand that. Getting ahead of regulations is the best way to be prepared for it. And in my role with EY last year, I personally spoke with or assisted over 100 companies, maybe closer to 200. I lost count. But the amount of really high-level people spending a lot of time on this law, I'm not talking a manager. I'm talking directors, vice presidents, executive vice presidents, even C-suite, spending time on a fairly small regulatory piece of the larger Dodd-Frank bill was what I call simply unsustainable. You can't have that many senior executives with 100 other things to do, spending this much time year in, year out on the conflict minerals requirement process. Companies really need to develop this holistic, repeatable process so that compliance just becomes an everyday aspect of how they do business. Similarly, don't fight it, go with it. If you can't measure it, you can't manage it. And to measure it, that means you have to get into your bills of material, you have to understand who you're buying from, and engage with your supply chain. It seems like a daunting task, but same way, how do you eat an elephant? One bite at a time. You have to look at your supply chain in the same way. You have to start somewhere. So let's go to some of the lessons learned. So like I said in the beginning, what is the big picture? It's to identify and respond to risks in your supply chain. So if you want to identify them and then respond to them, really frequent educational communication is really important. Our suppliers come from all walks of life, all geographies, all sizes. Some are public, some are private. Some are huge, some are tiny. Some are in the U.S., some are in Canada, Mexico, Malaysia, Vietnam, Thailand. They're from all over the globe. So the level of sophistication really varies. I've seen CMRTs that really point to a lack of understanding. And basically say, look, we're not subject to this law, so we're not going to answer. So that really becomes problematic for lots of companies. Once the next step is to really engage with those suppliers and build capacity. Particularly if you're a big publicly traded company, which most of the companies who are subject to this law are, you have to think big. And a rising tide raises all boats. So put out some training, offer a webinar, maybe a WebEx, something like this, a couple of different time zones, and let suppliers ask questions. Communicate, clarify, educate. And that's really the way to build capacity in a supply chain. The only way you can comply is with your supplier's assistance. And then finally, technology support. I've seen companies that, true story, a major Silicon Valley company, I was sitting in their boardroom in San Jose, and there were 3 very senior people in there, said, we're all set, we don't need any help. We sent our surveys out to 500 suppliers. And what they've done is taken the CMRT, put it in an email, and sent it out to 500 suppliers. I said, great, well, who's going to conduct red flag analysis? And as if on cue, all 3 pointed to each other. So it was really an interesting moment for me where clearly, no one sitting around the table is going to be able to review and remind 500 suppliers, hey, it's time to send me your survey. So really a thoughtful application of technology. If you have more than a couple of hundred suppliers, you really need technology, because ultimately when you come to the audit, we'll talk a little bit about that next, when you come to the audit, you have to show proof that you did what you said you were going to do in your due diligence phase. So if you said you're going to send the survey and remind suppliers 3 times and then follow up if you identify risk, well, you have to show that. And the technology platform is really the best way to do that. All right. So due diligence. Due diligence is more than just sending a survey. Due diligence is understanding what they're saying in the survey response. The CMRT, much loved by nobody, really does lend itself, though, to very good common sense, logic-based questions. For instance, if a company says, yes, I have 3TG. Yes, it's intentionally added. No, it doesn't come from the DRC, and I haven't surveyed any of my suppliers. Well, there's an easy red flag. What basis do you make that statement? Show me your smelter list. So the CMRT does allow you to do what we call red flag analytics. And when you find a red flag, you have to follow, per the rule in the OECD due diligence guidance, this thing called corrective action. Well, all right, you found a risk. What are you going to do about it? Really very simple. This law boils down to find risk and respond to it. So the OECD goes into great detail and says, you can terminate, you can suspend trade, you can do whatever. Our view at EY is that, and we found favor with this among many companies, is the first couple of years, particularly as this law is just becoming more understood, is to train. Training builds capacity, and this capacity is really what you want to be able to do with your suppliers. You want to be able to help them help you. So the corrective action is likely to increase over time, but it should match your policy for consistency. If you say you want to be conflict-free and you have suppliers that aren't conflict-free, well, you might have to do something about that with those particular suppliers. If you just want to say you want to comply with the law, well, that's a lower level of corrective action. But you do have to do something, and that's what we're going to look at when it comes to the audit. Reporting. Despite the FCC figuring that it'd be more like 4,500 companies that file a Form SD, only about 1,300 filed a Form SD, and about 3/4 of those filed an associated conflict minerals report along with it. Really what we see is you need a balance when you're filing data. You have stakeholder expectations. There's NGOs out there like Enough.org and Greenpeace and others that really are looking for a certain level of transparency and disclosure. Then there's the SEC, and then maybe just your own customers, particularly if you're a brand name consumer products company. What is it that you're trying to pass along? And you have to watch the language in the conflict minerals report. Someone from the SEC actually came out and spoke out and said, we're really surprised that everybody put a lot of their language into the CMR as opposed to the Form SD, because the CMR is what's audited. Now, you could easily argue what's the real difference between RCOI and due diligence, and we could really get into splitting hairs on that. But be careful what you put in your conflict minerals report. That's got to be auditable. Saying things like mostly and a substantial amount, those auditors tend to be really good at counting things, and it's hard to count words like mostly and for the most part, or substantial. If you surveyed suppliers representing 72% of your business, you should say 72%. In addition, you should probably also have proof for that. In terms of the audit itself, it's a pretty high bar to require an audit in the first couple of years, but it's not an impossibly high one. There were 4 companies that had IPSA last year. Intel, for instance, was one of them. We know because we did that report, and you can see that right on their website there. It took Intel a long time to be able to declare one of their products conflict-free. What that did is it sent 2 messages. One, it can be done. So for those who said this is an impossible task, they were treated to the fact that it's actually not impossible. And 2, it did also say, though, it takes a lot of work. It takes a lot of time. If you're expecting to be conflict-free next year, that's a pretty substantial investment in time and expertise you're going to have to make. And then finally, engage with your independent auditor well before the time you need an audit. Most people, like Rob said, you're probably not going to need an audit until 2016, spring of 2016. Probably not a good idea to call your auditor, May 15th and say, okay, I'm ready for the audit, because I suspect, there's going to be a little bit of a backlog. So engage early, just to make sure you have support when you need it. When you're, after the first of the year, when maybe you've closed down your due diligence activities, and you don't have to stop on January 1st, by the way, or December 31st. You can go into February, March, however long you want. Due diligence is really an ongoing process. You want to gather all these reviewable business records. So you make sure you have your policy up, a governance charter. Governance charter is just simple: who, what, when, where, why, and how of conflict minerals. What is it I'm trying to do? So when a senior executive says, what is this all about? You have a document that says, here's what it is, here's who's responsible. You're showing executive support. That is one of the pieces required in OECD due diligence. They don't specifically say you need a governance charter. You have to show evidence of executive support. Your supplier engagement strategy: how are you going to actually engage? Are you going to send them a CMRT? Are you going to do something different? Are you going to use technology? How many times are you going to follow up? That's the risk mitigation and corrective action. What is your plan to find risk, and then when you find it, identify it, respond to it? And then finally, you get to the grievance mechanism. It's a good way just to allow companies to come back and say, look, I think there's a problem in my supply chain, so make sure you have that. And one of the things we're counseling a lot of our clients right now, particularly audit clients, is look, a readiness assessment or a gap analysis or a mock audit, whatever you really want to call it, this year is a good time to do it. You had year 1 to work out the kinks. Now you're refining it. And before you get into an audit situation, you probably want to have someone come in and take a look at the program as if they were going to audit your program, but not actually audit it. So instead of getting an audit opinion, you get a findings and recommendations report. It's a really great way for you to have someone, an independent lens, look at your program as if they were going to conduct an audit on it, and then say, all right, here are the issues that I see that would have maybe precluded a successful audit. Because my favorite saying down here in yellow: surprises are for birthdays, not audits. Future casting, future reporting status is unclear. We're not attorneys. I don't know what the court's going to do, just as most people don't. But really, don't wait to the last minute. You should probably do something. Engage your stakeholders now. Talk about where you want to go. Company executives, customers, NGOs. Better to be transparent and open and say, here's where we think we're going. Does this meet your expectation? Do you have any recommendations? Company executives, where do you want us to be? Is being conflict-free important? And then what sort of impact will future track and trace regulations actually have on your company? And that can help you decide when you're investing in technology, looking to the future, what you might actually need to do. So where to go from here? Build your capacity internally and with suppliers. A readiness assessment is a good way to look at things. Look at your supply chain risk holistically. It's not just regulatory. It's financial, operational, and reputational risk, all which can have an impact on your company. You're looking at a materials identification, track and trace strategy, and be aware of the reputational risk. And a targeted use of technology can really help not only get ready for the audit, but can also help you when it comes time to engage with your stakeholders to show them that you're really doing some of the best work that you can. And finally, to close out before I hand it over to John, and I'll be around afterwards to answer some questions. We've got a few pieces of thought leadership on our website that you're welcome to look at, and feel free to reach out with any questions you have about your program or the regulation or what it is we should be doing. So with that, John, I will pass it over to you.
Thank you very much, Rich. I'm sure everyone's learned from that excellent presentation. Your recommendations and best practice descriptions were right on and helpful as always. Thank you so much. So now let's talk about RCOI, chaos, and confusion at this point. Look, as the industry makes the transition from CMRT version 2 to version 3, the challenges to efficiently and accurately reporting smelters in our supply chain are leading to chaos and confusion. I have no doubts that 2014 will be the most difficult year ever for conflict minerals reporting. My themes today? Look, responsible reporting requires accurate data. Responsible reporting, accurate data. Why? Look, you put bad data in, you give it to your customers, they give it to their customers, it doesn't get out of the system. Filers are telling us they want high-quality CMRT starting November 1st for year 2. November 1st, wait a minute, that's only 3 days away. Not much time to make sure that we get the data correct for our customers as they're demanding it. And then there's the next area why we need accurate data, Form SD. It's got to be audit-ready quality. You don't want an auditor to go in there and say, that data doesn't work, it's wrong. And what about the SEC? When are they coming in? Well, SEC's Director of Corporate Finance in September 12th stated the SEC is likely to start their examinations after the current Court of Appeals clarification. Sitting through an SEC examination is no fun. Let's put it this way. The executive at your company that will be in there is the one that drew the short straw. Make sure it's not you. Now, the other thing is company credibility and brand reputation. Constantly we hear that. Nobody wants to be branded as having cheated by just having put in inaccurate data. We got to make sure the data is accurate. We don't want to have any hits on our credibility and brand reputation for this. Then if we sit back for a minute and take a look at all the work all of us are putting in this conflict minerals area, okay, it can be undermined by inaccurate reporting. Look, we don't want to fund violence in the DRC. The reporting has to be accurate. We have to do it right if we're going to make this work. So now what's critical for accurate reporting is to have authorities. And the CFSI has become the critical authority for accurate reporting. Let's give the CFSI credit. Here's an organization of volunteers with real day jobs willing to take on a challenge the U.S. government will not touch. So what do we got here? Why are they the authority? Well, they've got the CMRT, they've got the Responsible Conflict Mineral Supply Chain Reporting because their CMRT is the industry standard. Their standard smelter name worksheet is the industry standard. Their smelter audits are the standard. Wow, not much more we can say. They really are contributing in a positive way. But it doesn't help unless their reporting requires both CFSI providing accurate data and conflict minerals compliance officers using it correctly. So we've got to make sure that from the perspective of the user that we are using it correctly. What's happened today? Well, it's a sorry state of affairs, quite frankly. But let's get to the fact that the supply chain data that we get is sloppy. Let's just put it right out there. Smelter entries are inaccurate, incomplete, or inconsistent. When you talk to conflict minerals compliance officers, they consistently state that the #1 RCOI reporting challenge is managing the smelter data provided by their suppliers. We run through our validation rules with CMRTs, and we'll typically find that we have to reject 40% of the customer supplier's smelter entries. 40%, that's outrageous. That's the percentage that tend to be inaccurate. It doesn't help that many large companies have cut and paste CMRT data entry policies. Instead of using the drop-down menus, the copy and paste commonly creates corrupt entries into the system. What should we be doing? Look, corrective action is required, just as Rich was saying. In this case, companies must reject their supplier CMRTs that contain corrupt data. But do our users do that? No. Commonly, they've got to get their CMRTs out, and so they work with these corrupt data sets. And what do we mean by corrupt data sets? Well, let's talk about rejected entries for a second, because we find it's very important that we group together the rejected entries. Let's take an example of sloppy data entry using version 3.0 CMRT. This is a real example we have on it. The metal was tin, smelter wasn't listed, but it was the gold belt group. Why wasn't it listed? It was in China, yeah, we know that, but it still wasn't listed, and there was no smelter identification. Well, we take that out and say there's a problem here. The rejected entries report pinpoint suppliers with whom communications is important. We would say contact the supplier who sent you that CMRT and ask them why they didn't supply a smelter ID. We say it's inappropriate to say, well, I can find that smelter ID, I'll just put it in. I mean, what's the big deal? They just forgot to put the smelter ID in, or they copied and pasted and it just didn't make it. Well, let's think what really happened. It's our CMRT version 3. We love the CFSI, but this CMRT version 3 introduction has created this crisis. A smelter on version 2 is no longer assured it would be a smelter with version 3. It's sort of like the planet Pluto. One day it's a planet, next day it's a rock. Okay? And the disappearing smelter phenomena was not recognized by CMCOs and not recognized fast enough. And those that did could not manage it with manual methods. But a key lesson we have learned is that the CFSI will continue to make such changes, and if we don't prepare, we'll continue to have these incompatibility issues. I mean, simply put, you can't mix suppliers' V2 and 3.2 standard smelter names lists without introducing inaccurate smelter entries. You've got to go to only V3 standard smelter names. And why? Look at the summary of changes. 33 of 200 standard smelter names published in 203A were changed. 20 tin smelters were removed altogether. 3 gold refiners, 2 tungsten refiners, a tantalum smelter, changed numerous aliases. It's impossible to manage this manually. So what happened in our former example of the chaos caused by version 3? Well, here's what we really had. As you saw earlier, we had our supplier's entry, tin, smelter not listed, gold bell group, China, smelter ID. But if I go to the smelter names worksheet, V30, we can't even find gold bell. We go between these two, between GE and HU, there's no gold bell. Uh-oh. We go back to CMRT version 203A, we did include gold bell. There it is with its alias, with its smelter ID. But if I'm a filer today and I incorrectly put gold bell on my CMRT, which most people are doing because they're not able to manage the system, I've added more inaccurate data into the system. Bottom line, we've got chaos in this system right now. It just is not going to work, isn't going to work properly going forward. It just isn't there. Okay. You know, our head quickly tells us that this is wrong, even though our authority does not know what gold bell is today. And by the way, gold bell was considered the 7th largest tin supplier in 2007. Now, is there anything else we've got to complain about? Well, there's one small little annoying problem. The new smelter ID system is randomly assigned. What's wrong with that? It requires our CMCO to check suppliers' accuracy even down to the smelter ID, where formerly we at least had a quasi-semi-check that when it was 1 AUS 046, we knew it was a gold smelter located in Australia. It at least gave us a chance to look at it and see if our smelter ID was correct. Okay, let's conclude with a few thoughts. How do you manage mixed environments of V2 and V3? Because as much as we'd like everything to be version 3, we know you've got to manage a mixed environment going forward. So we've got to ask you to take a focus with laser intensity on accuracy. That has to be your #1 priority. You just cannot have inaccurate information put into the supply chain by you. There's too many consequences that are not good that'll come of it. And then the second area is manual methods are error-prone, time-draining, and require unacceptable long turnaround time. Both Rob and Rich were talking about why you have to automate. But you know, you've got to, because if you can't manage this accurately, when the IPSA is examined or the SEC comes in, you don't want to be sitting there with corrupt bad data. Automation is the only realistic approach to managing the current chaos and confusion in conflict minerals reporting to obtain accurate auditable RCLI reports. It simply is. You have to have a rules-based validation of suppliers' CMRTs. We rarely go through a CMRT when we don't find that the supplier or the person that wrote it did not follow that one worksheet called instructions. You've got to be able to do smelter consolidation. That is, only keep clean data into your smelter. Make sure your smelter consolidation, that is where you consolidate the smelters listed from your different suppliers, is clean data. Make it so accurate you can use it for your own CMRT. We found that using a rejected entries report is very powerful. As Rich talked about due diligence with your suppliers, you've got to have this information in a place where you can say, here's what you did inappropriately. We have to clean it up through the whole supply chain. And then we always want to know what the current smelter CFSI audit status is. Why? Our goal is to get it to 100% CFSI audited. We want it to be clean as we go forward. So we need to have that. And what we're finding is companies are going on a monthly basis of running their CMRT reports. Why? You know, you've got 6 tiers in your supply chain. You can't just run it twice a year and hope that you'll be able to clean out all those bad older reports. You got to do it monthly. It still will take you 6 months to clean them out. But at least you have the opportunity to show progress going forward, and you're again putting in accurate data. Wow. I think I've gotten off on accurate data. Thank you very much for your attention. And now we're going to open this floor to questions. Rob, Rich, and myself are here and available. Let's go and see if we've got any questions at this point. Actually, we got quite a few. Rich, you said that companies are going deeper, not wider this year. Can you expand on that a little bit?
Sure, I'd be happy to. So really, you know, a lot of people got hung up with a requirement around continuous improvement, and they figured, well, there's a requirement for continuous improvement, so that means if I sent 500 surveys this year, I should send 6, or last year, I should send 600 this year. And continuous improvement is just not a numbers game, because just scattershotting more and more surveys doesn't really get you closer to the finish line. And remember, a finish line, like I said, identify risk, respond to risk, and then ultimately, you're going to need to connect the survey responses you received into the products that you make. So that's a daunting task. I mean, so many companies I spoke with, you know, they have 10, 12 different ERP systems. They have different part numbers for the same component depending on what product it's used in. You know, that's the rule, not the exception. So when you're looking at broader, not deeper, what that really means is, I mean, deeper, not broader. What it means is taking even taking a step back. We had a few clients last year that sent well over 10,000 surveys, and really that doesn't afford itself an opportunity for deep learning. Instead, take a step back, pick 2 or 3 high-running products that make up, you know, a substantial amount of your revenue, and really do a deep dive into the bill of materials and engaging the suppliers. So that helps you get a complete picture. I mean, even Mighty Intel in their conflict minerals report, that's what they said they did. They picked one product, was a network processor. It's a high-running product for them, and they said, let's get really deep in here and understand this supply chain really, really well. So rather than just throwing out more and more surveys and not having a good process for risk mitigation and corrective action, instead look at how can I go deeper in my supply chain and understand it better, build that capacity to get better quality information back.
Well, that leads to the next question I see, and this is for Rob. Hey, Rob, how deep and wide must I trace my supply chains and document the supplier's operations as sustainable or not before I can feel comfortable reporting to the C-suite we are safe from a supply chain failure?
Well, thinking about what Rich said, what we really have to focus on this year, many companies are focusing on this, and they're doing the right thing, is to focus on getting a system all the way down. And we're really talking about focusing through the tiers, which includes the trading companies and distributors, to get them to follow the chain of ownership back to the smelters at least. And most companies, of course, go back to the smelters and to find out what happened to, where did the smelters get their materials, and did that materials pass on correctly and identifiably to through the chain to us? That's really what the requirement is. So you need to, and the challenge is really to go through the these tiers and to rely on Tier 1 to talk to Tier 2, get the information from Tier 2, and the Tier 2 people to talk to Tier 3, and it could be 7 or 8 or so tiers, and that's a challenge, and communicating through there is the big challenge. The objective is to identify the risks associated with it and to go back to at least to the chain, to track the chain of ownership.
Well, Rich, we got another one for you. Hey, here somebody says, I'm still confused about RCOI and due diligence. Can you explain what the key difference is?
Oh, bummer, one of those questions. Sure, I'd be happy to. So, when you read the rule, you say RCOI and due diligence, well, those are maybe two separate steps, right? Well, not really. I'd like to think of it as gates you go through. So when you send your surveys out, there's one gate. You've sent surveys to your identified suppliers. Well, really, if you take a step back, you have your applicability assessment. Which products do I make that have 3TG? Who are the associated suppliers? Where's the risk? Let me send those surveys. You'll get some surveys back right away. It says, I'm sorry, I just don't have 3TG. It's a paper product or packaging or just something that you might have missed. But a large part you're going to get surveys back, and they'll have really three answers when it comes to, do you source from the DRC? And say yes, no, or I don't know. And the only true due diligence is when a company says, yes, I source from the DRC, and I'm not really sure, and here's the smelter name, and it's not perhaps on the conflict-free smelter list. That's true due diligence, meaning you've identified a supplier that sources from the high-risk covered countries, and you're in the midst of tracking down the smelter information. All other responses, either no, and that would and it's a adequate representation, meaning this supplier has surveyed their supply chain, they've heard from 80 or 90% of their suppliers, they can come back and reasonably tell you, I don't source from the DRC, even though I do have 3TG, maybe I've got some tin and gold, I buy my gold from a recycler, here's a certification, so that ends RCOI. It's that middle piece, that unknown. Is that due diligence? Is that RCOI? We sort of call it an extended RCOI. It's RCOI until it's proven otherwise. So, and that's where a majority of a lot of companies' risks are, with those suppliers that just say, I simply don't know. I don't know if I source from the DRC. Well, you really want to re-engage with them and say, all right, I encourage you to continue going down your supply chain. You can point them to the free templates available at conflict-free sourcing initiative. You can encourage them to send the CMRT or however they want to get this information back to you. So technically it's RCOI, but really it's a due diligence-like activity. So it becomes due diligence, and what you talk about on your CMRT when you're talking about who did you engage with that says, yes, I source from one of the covered countries. Everything else up until that point is still considered RCOI.
Oh, very good. Well, I've got one actually for myself here. It says, John, my boss's boss only cares about the cost of our company's conflict minerals reporting program, not the quality. Any recommendations on changing his priorities? Well, this has always been an interesting question. One area is, who do you want to be associated with? The people that are members of the OECD and the CFSI, or those that are on the NGO's devil's list? That's always the first beginning. The second area is to ask them to talk to your customers directly about whether what their requirements are for conflict minerals. You're seeing at the filers and the OEM version, the pressure is increasing for accurate data supplied correctly at the right time. We see in the auto industry, for example, one of the major auto companies preparing to do audits going forward. Then there's always a fear factor, the SEC. SEC examinations are not pleasant. And I think it's been forgotten that sometime next year the SEC is going to be coming in to do an examination, and you know who wants to be associated with it? Nobody. And if all of that doesn't work, finally ask the question, would you want to give one of your loved ones blood diamonds? Would you want to give them conflict minerals with blood on it? No. It becomes a personal thing. Something that affects employees. They don't want to work for a company that's not doing it properly. Quite frankly, at the end of the day, when you go through all the advantages of doing this right as opposed to the disadvantages of just trying to save a few pennies here, the advantages totally outweigh the disadvantages. Let's see. I think we're close to wrapping up. It's 1:45. One last question. Rich, you've been so helpful. We're going to just ask for you one last time. You said training is a good way to engage with your suppliers. Our questionnaire says, I posted a how-to guide on my website last year. What else can I do to improve my response rate? Wrap it up for us, Guy.
Sure, that's a great question. So training or a how-to guide is a great way to do it. Recognizing too that there are many suppliers in different parts of the world that don't really understand and are reluctant to fill out the CMRT because they think they're going to somehow get in trouble. What's the right answer? What is it that you're looking for? So having a training posted on your website is one thing, but then what we're seeing a lot of companies do is having 2 live WebEx sessions like this. If you're, say, in the East Coast, you have it at 9 a.m. or something like 10 or 11 o'clock in the morning and 9 or 10 o'clock at night. That way you're covering all the U.S. time zones as well as Europe with the first one, and you're covering India and China and other parts of Asia with the second one. And having a live Q&A. Even having something like this where respondents can type in their questions, because often their written English is fine, but their spoken is maybe not. So they can type in their questions. That's a really great way for capacity building. Lots of companies also have annual supplier meetings where they'll go to 3 or 4 different countries every year, and they'll invite hundreds of suppliers. Getting a guest speaking slot on in those supplier meetings, and these are the meetings where the supplier expectations, code of conduct are discussed. It's easy enough to add on a conflict minerals segment and just say, look, here's what the law is, here's what it's not. You don't have to worry about these things. We're not going to use it against you. We just want to get the information, and that usually goes a long way to boosting not only the quantity of response rates, but the quality of response rates as well.
Rich, thank you. That's a perfect end to our discussion today. Thank you all for joining us. We will have the presentations out to you all by tomorrow, and with it you'll have our contact information. So while this concludes our session today, please feel free to follow up with any of our presenters at any time. Thank you for joining us. We appreciated it and enjoyed providing you with this presentation.